The Federal Reserve just lowered its benchmark rate again, and this isn't just a headline for traders. It could change your mortgage, your savings, and where smart investors move their money next. We'll break down exactly why the Fed cut, who benefits. The Fed committee lowered the federal funds target range by 25 basis points to 3.75% to 4%. This is the second cut this year. The Fed move was a response to rising downside risk to employment and slower growth, while also warning that data gaps make future moves uncertain. A few reasons that the Fed cut were to support jobs growth, as well as there's some layoff announcements, and softer hiring signaled rising downside risk to employment, which caused the Fed to lean towards easing. Private sector reports and some indicators showed cooling activity. The Fed's main goal is to avoid a hard landing. The current government shutdown has delayed official economic data, so we have to wait on that. It's causing a little bit of uncertainty at the moment. We'll take a quick look at mortgage rates. May drift lower, but current mortgages only change if you decide to refinance. Mortgage pricing also depends on long-term bond yields. Many consumer rates are tied to prime rates, so over the next several weeks, you may see APRs soften. Banks often lower deposit yields more slowly because of rate cuts. Also, cheaper short-term funding can ease business costs. Markets tend to read rate cuts as risk management moves, not a full easing cycle. After the Fed meeting, the markets had a sell-off because Fed Chair Powell made a clear decision that rate cuts aren't guaranteed at the moment without better data. A few keys in this current market is to diversify across assets such as high-quality bonds for stability, dividend stocks for income, and selective real estate exposure for yields and inflation protection. Most importantly, do not forget to take advantage of the growth stocks with moats for growth. There's a tons of great companies on sale right now. Just make sure that their moat is strong and their fundamentals are in order, and it should pay off very well. Just remember, the trend is your friend. So these dips in the market are expected. You just got to take advantage of them when they arrive. The Fed has to look at the jobs versus inflation. So we'll take a quick look at that. We look at lower rates can help hiring, but risk reigniting inflation. The Fed must weigh which problem is more pressing. Winners from the rate cuts are borrowers, businesses rolling short-term debt, home buyers who can refinance at lower rates, and certain cyclical stocks. The losers are savers and anyone holding short-term cash or low-yield bank accounts. Fixed income investors who have bought shorter duration bonds expecting rates to stay higher are also big losers. Let's take a quick look at a few things to check on in your own portfolio as well as your own finances. Check your loans. If you have a mortgage, you can loan. If you've got a mortgage or a car loan, run refinance math. Don't assume the headline rate equals your savings. Second, don't panic sell. Volatility around rate announcements can create buying opportunities, as we just discussed. Third, rebalance to your plan. If you're overweight in cash and seeking yield, consider laddered CDs or short-term bond funds. Fourth, basically this is a great time to beef up your emergency funds. You want to keep at least 6 months of income put back, to pay all your bills for at least 6 months. You always got to be prepared for a rainy day. Next, look at the dividend and quality growth stocks. Historically, modest rate easing benefits quality dividend payers. Evaluate cash flow and payout sustainability. Stay diversified. Always invest across asset classes. And finally, we want to go over a few key points is if you check your loans, we just went through that. Don't panic sell, very key. Rebalance to your plan and your emergency fund, all big keys. There's 3 leading indicators to pay attention to in the market. The first is job reports and payrolls. Second, you've got core inflation metrics, the PCE and CPI trends. And third is Fed communications and dissenting votes. This is very important, to pay attention to every month. These reports come out, and you want to keep track of what inflation is. Inflation is currently at 3%. The Fed's trying to get it down to 2%. So, we should see more rate cuts in the future. That's really a big goal, and that's also these rate cuts should be the catalyst the market needs to continue to climb higher. So, being invested right now is, key to long-term success. Also, this rate cut was a deliberate and cautious step to support labor markets. Chairman Powell emphasized the importance of labor markets and what his focus was over the next few months. And he's really waiting on more data to come back. When the government opens back up, we should have a better view overall. We still have, earlier this year, we believe there's going to be at least 2 rate cuts. We just had one announced, and there's one expected in December, but it's still up in the air just because, of the lack of data at the moment. Chairman Powell's always been really conservative, and obviously wants all the information in front of him. So we'll have to wait till we get closer to December to find out exactly what's going to happen and to get a better outlook overall. But I appreciate everyone watching this video. If this video has helped you, please hit the like and subscribe and ring the bell. I upload a video every week. Drop a comment below of what you're considering investing in. I read and respond to all the comments. Also, be sure to use the referral links. I have one for Webull. You get a free stock from Webull. It's a win-win. Can't go wrong. Webull is one of the few brokerages you can trade between 4 a.m. and 7 a.m. Also, I have the Coinbase referral link. There's $15 of cryptocurrency. And you also can do the learn and earn and make it $2 or $3 every single month, so you can't go wrong there. It's free Bitcoin. So be sure to click on those if you haven't already. Hope everyone has a very profitable week, and I'll see you all back here next week.